Well, hello and welcome to Passing Notes with Chaz Guinn. My name is Hayes Brumbeloe. I'll be your host. It's going to be a weekly podcast where we get to sit down with Chaz Guinn and really dive deeper into the world of buying and selling notes, rental properties, long-term wealth creation. It's going to be an exciting time. We thank you for joining us. So without further ado, let me introduce the man, Chaz Guinn. How are you, sir?
Hey, it's good to see you.
Hey, cheers, man. This is our first episode.
Our first one.
There we go.
Finally, we have being able to kind of share the knowledge and bring a lot more interested real estate folks into the space. It's not just always about notes. I mean, we buy notes that are all backed by single family homes.
Right.
But there's a way for folks to get into the space, and I'm kind of excited to kind of share that knowledge and bring on subject matter experts and really help you as an investor grow your business.
Love it. Well, let's dive in. All right, so who is Chaz Guinn? Let's talk about your background. What's that look like? Yeah.
Right time, right place back in 06, 07, and 08, getting fresh out of college. And I was there in Southern California, and that was the melting pot for the subprime meltdown.
Sure.
All these mortgages were being created all across the country to the tune of trillions of dollars. And then here we were starting to see a downturn in 2007.
Right.
That was slowly starting to show itself in markets.
Right.
But I was working for a company that was first to market in buying these pools of mortgages, all backed by delinquent mortgages, all backed by single family homes.
Right.
Okay. So we get into the space in 2007 and 8. And I'm coming fresh out of college. Thought I could play a little bit of NFL after I played collegiate football. And here I was trying to really get into a new space that still quenched my drive of competitive nature, right? Sure. I really missed winning.
Right.
And we were getting into this new market that was really going to create opportunity. I don't know if we knew the width of the opportunity that was going to be created, but Here comes 2008 and 2009, where we really started to see home values dropping. And this is where I really sunk in, Hayes.
Right.
I really said, look, I want to learn this business. And I really dove in as a young man. And before I knew it, in a few years, I was managing a trade desk that had 4,000 to 5,000 mortgages in our portfolio.
Wow.
Billions of dollars, right? And I'm like, whoa. What a space. What a space for you to be in, not only as a real estate investor, but you could be anywhere in the country.
Sure.
If you had good sourcing and you knew how to be able to potentially buy houses through due diligence, valuing, sending boots on the ground to these houses. That was the real challenge. Its values were dropping in all 50 states, but folks that were in California were buying in Maine.
Right.
They were buying in New York and Florida because folks were chasing opportunity versus just chasing, the highest market value that you wanted to stay in because that's what you knew.
Sure.
So Chaz Guinn, ex-athlete that turned to trader, to financial analyst, that really dove into wanting to become a portfolio manager and manage our own book. And that's what we're doing today.
Yeah. And so Revolve Capital.
So started Revolve Capital in 2018.
Right.
And this was coming off of running some prior funds where from 2011 through 2018, we bought 9,000 single family homes, all backed by mortgages. Mortgages that were all backed by single family, I'm sorry. So for us in 2018, we wanted to do it a different way. We wanted to allow investors like you guys to be able to get into this space.
Right.
We noticed there was a big barrier of entry to get in. And that was a challenge. You didn't know the proper guys that were selling.
Sure.
You didn't know the infrastructure, meaning you didn't have resources that were in states you may not have been in. Right. So how do I get people to go look at the house if it's potentially vacant? How can I get somebody really looking, from my point of view, to make sure that my dollars weren't being burned?
Sure.
Because I wasn't there and I couldn't drive it myself.
Sure.
So the infrastructure wasn't there for most of these investors, so they didn't play outside of their sandbox.
Sure.
So we created Revolve Capital to say if we can create education, proper education, helping folks to set up the right infrastructure, and you have good sourcing and good boots on the ground, chances are you guys can do this business from anywhere in the world.
And we see that with, people nowadays, they want to be able to travel. They want to be able to, it's all about freedom to be able to do what you want to do. That's where the freelancing, aspect has really just kind of taken off. And people want to be able to do what they love to do and work at the same time.
Look what COVID brought us, right? Everybody was forced to shutter in their house and work remote.
Right.
And in 2020, we bought $65 million worth of these mortgages from our house.
Right.
I had team members spread throughout the country. I had folks in Oregon. I had folks in Florida, New Jersey, Dallas, Texas, where we are.
Right.
And I said, look, we have folks and resources throughout the country. However, our volume is doubling.
Right.
So, and you can do this business from anywhere. We have clients, buyers, note buyers, investors that are in Germany, that are in Israel, Switzerland, and they all own single family homes here domestically.
Right.
But they're across the seas.
Right.
They have an internet connection, they have a phone, it's relatable. Right? It's something that everybody should try to learn what we're doing and how to get into the space.
So let me ask you this. How many notes have you moved in your career?
So we just crossed the 10,000 mark. I mean, that's mind blowing.
Wow.
I know I'm a younger guy. I've been doing this now for 15 years, and we really came out of the gate in 2011. We're buying these in bigger bulks, right? Supply in terms of volume is still very much there, but the size of the trade in itself is starting to dwindle, right? So you have to be a little bit more consistent on your purchases. But from 2011 through 2018, I mentioned we did 9,000, and over the last 4 years, we've just crossed the 1,000 house mark, right? So now we just crossed the 10,000 unit, and we want to be able to allow folks like you that are listening to be able to do the same. Right. We're not special in terms of the business in a box that we're trying to help create for folks.
There we go.
The business in the box of the sourcing, business of the box of due diligence and underwriting, business of the box of managing and selling, and then being able to rinse and repeat that process. That's what we're really trying to unlock here.
I love it. So let's talk about this. How is buying notes different from traditional real estate investing?
We're buying mortgage debt.
Right.
So I always say this from a funny term. We fix and flip mortgages. Okay.
You also say there's no such thing as a bad house. There's a bad price.
This is a bad price.
Right.
And I use this example, but take the rusty Volkswagen that your neighbor's trying to sell at the end of the corner of the street.
Yeah.
He's got the for sale sign in the window, and it says $500.
Right.
You're like, chances are I could buy that and probably flip that for $1,000 or $1,200.
Right.
Make a nice little spread. Let's take that same scenario and put a $3,000 for sale sign in the window.
Right.
Tougher price. Am I going to be able to flip that for a good enough profit? So it's not a bad deal. It's a bad price.
Right.
And we can relate that into the mortgage space because every home, no matter where it's located, has a good price point. There's an entry for you to get into. Are you factoring in all these issues? And the reason how buying notes differs from traditional real estate takes a lot of work.
Yeah.
You got to roll your sleeves up. You got to find local general contractors, especially in today's world. Look at lumber. Look at the supply shortages. Yeah. We're starting to see that being able to rinse and repeat opportunity is slower in the real estate market from the rinse and repeat cycle that notes provides. We called ourselves Revolve Capital because we're flipping through real estate multiple times throughout the year. Where how many times are you able to do that on individual assets through real estate?
Hey, so what are some of the asset types that Revolve Capital sells?
We sell 3 different types of assets. I told you earlier that I used to play football, so let's use the analogies.
Sure.
Offense, defense, and special teams.
Yep.
Okay? So non-performing loan, NPL, re-performing loan, RPL, REO, real estate owned. And this just depends on you as an investor, you as a buyer. Do you want to be hands-on or hands-off?
Right.
And that will determine the type of product we as a company want to put in front of you. So we offer these three types because there's 3 different types of borrowers. There's folks that haven't made a payment in a certain period of time, right? And they're non-performing and they could be delinquent for years on end. And that's a non-performing asset. A re-performing loan, they're spotty paying. They may have been modified. We put them back on track, or the prior bank put them back on track.
Right.
And then real estate owned, it's been fully foreclosed on. And this plays out to the fix and flipper. This plays out to the rental. This plays out to that type of strategy.
So Chaz, what was it like back in 2008 and how does that compare to today's market situation?
I feel like these are the most articles that we're all seeing in today's news, whether it's on website articles, whether it's on social media. Everybody's saying this is not the '08 crash again. It's sure not. Look how much more equity each homeowner has in their house today versus what they had 15 years ago.
Right.
So 15 years ago, the values were falling off of the cliff. You didn't know if your house was going from $500,000 to 450 to 400, and where was the bottom?
Right.
That's not happening in today's market. So in terms of comparing and contrasting where we sit into today, is there was different strategies back then. The strategies from a buyer's standpoint is you could buy the real estate debt for pennies on the dollar, right, because the house value was continuing to drop off the market. And if the market started to bottom and it started to go back up, right, then your pennies position should have doubled, tripled, or done more than that, right? I don't think that's today's price points today. We're not buying mortgage debt for pennies on the dollar today like we were back in 2008, 9, and 10.
Right.
So, but today the homeowner's sitting on equity. Okay, so you're sitting on a $500,000 home, but you owe the bank $350,000. Okay, but you haven't made your mortgage payment since pre-COVID. Okay, and many people don't realize that there's a separation between your mortgage payment and your landscaping and your electric bill and your ability to wave to your neighbor, even though you haven't made your payment in 3 years, and you don't know the difference.
Sure.
You know, in terms of that. So that's not today's market. Today's market is the homeowner sitting on equity.
Right.
However, they have years of back payments, years of insurance premiums they haven't paid, their escrow payments they haven't paid, their property taxes they haven't paid.
Right.
So all that is eating up people's equity today, right? So we sit here and people with an equitable position, $500,000 home, $350K they owe the bank. But chances are you owe $150K of back payments, back fees, back interest, back tax. So there goes your equity.
Right.
So today's market is not like '08. However, there is strategy, there is deal flow in finding the right upside borrower or actually break even type of asset for folks to get into. And we'll dive into that a little later.
Okay, cool. So in regards to Revolve Capital, what are the asset types that Revolve Capital sells?
There's going to be a few different types because we talk to rental guys all the time. They're buying for their rental portfolio. And we try to teach them, hey, buy the note. Buy it before it goes into foreclosure and it's vacant already. Right. We already know that the homeowner has been emotionally detached from the asset. So why don't you look at a late stage NPL, non-performing loan? So we sell three types: NPLs, non-performing loan; RPLs, reperforming loan; and REOs, foreclosed houses, real estate owned. Okay. So if you're looking for fix and flips or you're looking for rentals, you're going to want to look for late stage NPLs. If you're looking for passive cash flow, we call it mailbox money, then you're going to be looking for your RPLs, right? And this is usually shown in our data. You're going to see the pay history.
Right.
You're going to be able to tell the story. We always say facts tell, but stories sell. Learn the story, right? There's a reason why they stopped paying. There's usually 4 major reasons folks stop paying: divorce, disease or cancer, there's been some sort of job loss or hardship. And usually there's a variation of those main 3 that kind of create a 4th, or potential death, right?
Sure.
And this is why folks stop paying altogether.
Sure.
So that being said, those are the main 3 types: NPL, RPL, and REO. And depending on your strategy as a real estate guy or gal that wants to kind of jump into this space, we kind of can separate the type of product that we show you based upon that criteria.
Sure.
And as I mentioned earlier, it's kind of an offense, a defense, a special team strategy. For us on the offensive side of the ball, we like to get in and get out of assets in a relatively fast time frame, hence the name Revolve Capital.
Sure.
So we have a nice deep buyer database that we supply many folks throughout the country, even abroad, that are looking for deal flow. And we do that through a consistent monthly offering that we show our database. And we welcome you guys to sign up so you can start seeing real regular deal flow.
Right.
And then we have a lot of folks that are like, hey, look, I want to move some of my 401k or my IRA cash so I can have a better passive cash flow and start really bringing my 401k a higher return than I am today, or my self-directed IRA. You should probably look at mortgages that are still 30 years out.
Sure.
That were just originated just a handful of years ago. or 25 years out, and there's the passive cash flow.
Absolutely.
That you're looking for, right? So, and then you talk about the REOs. There's a lot of guys that are like, look, or NPLs. You go back to the NPL space, there's a lot of folks that are like, look, I want to keep those homeowners in their house.
Right.
There's a story still there. I know they haven't paid in 3 or 4 years, but it looks like they're back to working. They've been calling into the servicer saying they want to get back to work, right? So that's a lot of what Revolve Capital does, is keep families in their home. And what we do from an investor standpoint is being able to take a non-performing loan, creating it into a re-performing loan.
Absolutely.
And being able to do right by the homeowners, right by the community, right by the mortgage servicer as well, keeping the family together. Right? You and I both have little boys.
Right.
We don't want to have to move them from a different school district just because we couldn't make our payment. But we need our bank and our lender to work with us.
Absolutely.
And if you can do the ethical thing for folks, there's also an investment strategy there that we also want to teach you, taking NPLs and selling them as RPLs.
Absolutely.
Different strategies.
So what would you say is the barrier for an investor to get into this space, or what's it look like for a someone who's discovering Revolve Capital for the very first time, or discovering, the space of buying and selling notes?
A little bit of education.
Sure.
And, folks do need to, it's different, right?
Sure.
But it's still a 3-bedroom, 2-bath, 1,800 square foot home that many of you have bought in your careers.
Sure.
Right? Yes, you're buying the mortgage debt to get to that potential same strategy, but there's a little bit of jargon.
Sure.
A little bit of things they got to learn in terms of kind of the nuances of how things are done. But
sure,
that takes a bright person very, very little time to get educated.
Right. Right.
And if they can dive in and get educated, then they're kind of lethal, right? Because now you have education. You're starting to build infrastructure, meaning property preservation companies that are national, 50 states, valuation companies that give you real-time pictures, both exterior and interior. How do you align yourself with these sorts of companies? Door knocking companies, right? So there's $50 million in our current portfolio today, and we don't have personal eyeballs in every single house. I'm not going personally out there.
Sure.
But my infrastructure is.
Right.
My national vendors are, right? And we'll teach that.
Absolutely. I think that's wonderful. Let's think here. Managing this type of business while someone travels is got to be extremely attractive to somebody, especially if, it doesn't really depend. You could be, in your early 20s or in your, later 70s, anywhere in between. I mean, being able to travel and then manage this type of business, that's a huge selling factor. Yeah, I think with COVID alone, everyone was locked down for basically 2 years. Everyone's just itching to get out. So now it's, the gates are kind of getting kicked wide open again, and people are traveling again. And then to be able to almost like reinvent yourself from an investment standpoint with, a company like Revolve Capital, there's some serious value there.
I'm glad you touched on that, because we're starting to see an entirely new wave of investor.
Right.
This is the guy or gal that prefers to be with their kiddos, that prefers to be at the soccer game, right? But they're still very much present, not only both at home, but also present in their career, because if they have an internet connection, they've got good infrastructure and a phone and a smartphone today. I know it sounds too simple, but this is where folks really want to be able to still move and groove in their life, Hayes. They still want to be able to take those trips, take those vacations. And what stops you? What stops you? Today, we are allowing more and more folks, dozens by the week, are coming in saying, look, I have a Sprinter van, one of those Mercedes Sprinter vans. Me and my husband, we travel the entire country.
That's right.
We'll even go to Cancun, Cabo, and we'll do droider footage. And before you know it, I'm buying one of your assets, because I can launch value. I can launch title. I can launch all my processes here from the beach, right from the sand. So this is kind of a new breadth and a new unique way to create flexibility for yourself, both at home and to be able to really launch a career, launch a fund, being able to do this on a national stage and a national level. It's
business in a box.
Business in a box.
That's beautiful. Well, I think this podcast is going to be, I think it's going to be really unique. I think it's going to bring a lot of attention to this space. It's been kind of I won't say it's been hidden, but it's not mainstream. And I think that we have a huge opportunity to have a nice casual conversation like this to really dive deeper into the audience that's, following us. These are golden nuggets that they're going to be able to really dive deep with us. So
it just seems like this fraternity, and we need to unlock that.
Sure.
We need to allow folks to realize that it's a friendly space.
Sure.
It's an exciting space. It's a space that people need to learn about.
Sure.
But it's time. That's why I'm so glad and excited that we're doing this, because for 15 years, it's kind of been an elitist type of deal.
Right.
And it does not need to be. Everybody and anybody can come into the space.
Right.
Especially if you know how to potentially raise a little bit of capital. We'll teach you how to do that.
Sure.
But you need to do it safely and ethically. But if you can get your hands on some capital, and we be able to really properly source you guys good deal flow, and we make you understand what's a good deal from a bad deal,
Sure.
right? Because there's no bad deals. Again, that's going to be tied back to bad pricing. But we're starting to get really excited to say, hey, look, in a downturn, because everybody's seeing, look at rising interest rates, look at inflation on a run right now.
Right.
Look at the 30-year fix is top 7%. You know what your rate is. And we're saying, let's go. It's time for, in a down cyclical market, folks can start to truly take advantage of this space.
Right. I love it. I think this is going to be a great conversation. It's going to continue. That's all the time we have today. We thank you for stopping by, checking us out, and we look forward to the next episode. Make sure you subscribe, like, do all the things. But we look forward to seeing you here next time. In the meantime, send us some comments. We'd love to get your questions, whatever it may be. And make sure that you go to revolve-capital.com. And that way you can learn a little bit more about what we do at Revolve Capital. Thanks, and we'll see you soon. Cheers.